Hey everyone, welcome back to Yuri's Box. In this video I'm going to look at the S&P 500, what is going to happen on April 2nd in relation to tariffs. If you like this kind of video, this kind of content, consider leaving a like, and as usual nothing in this video is financial advice. So, albeit with, a great degree of, being early on my part, that's for sure, we seem to be getting the rally that I was expecting, the bounce that I was expecting a few weeks ago. And I think this has a decent chance of, as I was expecting, to go back to the bull market support band. Somewhere, I would say 5,900 would be a good point of arrival. Now, if we follow through and we end up just blasting through it, I think will depend really on whether the current events that are bugging the market, which are really tariffs and fiscal tightening, really persist or they just dissipate. Okay, so if on the tariff side we get something like, Trump on April 2nd actually wakes up and he says, "Oh, you know what? I had a dream. No more tariffs." That will certainly help. If you get immediate stimulus, say some kind of government program where you're just handing people money, then definitely that would definitely be a big boost to the stock market, and that would increase the chances of the stock market actually moving significantly higher than the bull market support band. But really, in this video, I'm going to talk about what are my expectations on April 2nd, and I'll be looking at a few scenarios. Now, I really wanted to make this video before Trump spoke, but here I am. I just got enough time to make the video now. So there are a few things that can happen on April 2nd, really. Okay. Now, the most bullish outlook for April 2nd would be no tariffs. Now, this for me is unlikely, simply because Trump seems to be quite keen and fond of his tariff policies. And so, although you still have to keep it in mind, I don't think it is the most probable outcome. The second extreme, in my opinion, would be probably one of the most bearish things that could happen, which would be further delay on tariffs. Now, I can see why you could also make the case that it would be bullish, because it's just kind of flip-flopping at that point. But a lot of what has been driving and what has been, causing some disruption is really the fact that ever since the beginning of the Trump administration, you really didn't have much certainty. Part of what has been bugging the markets is first you have tariffs, then you don't have tariffs, then you have tariffs, and then you don't have tariffs. It's this back and forth that isn't constructive. I think that both of these cases are really to be considered kind of the tail ends. You still have to account for them, but I don't think they are part of the most likely outcome. I really think that there is the belly of the curve, really, of what it is most probable, in my opinion, is made up of really the tariffs are put in place, and from here you have a subset of possibilities. So possibility A, and I'm just for the sake of the example, let's say that a 10% tariff is the minimum that Trump is willing to apply. 20% is kind of the midpoint, and 30% is, would represent Trump actually, going deep in, and just, maximum pressure. Now, before I move any forward, it is also important to consider, why are we even considering tariffs? I mean, what are your assumptions about tariffs? Why do you think Trump is threatening tariffs? And this is personal opinion at this point. I mean, history will, be the judge of that. My opinion is that the bulk of this move for, with tariffs is aimed against the EU. Okay, so I'll come back to the subset. So EU is the main target for tariffs, in my opinion. And why is that? Because really, at least on paper, the EU and the US are allies. And they, again, when it comes down to shared values, now again, things have definitely moved around. But again, at least on paper, the US and the EU are natural allies. However, when it comes down to the commercial relationship, the EU has currently high tariffs on goods incoming from the US. So we're not really, the European Union isn't really treating the US in a friendly manner, given the fact that the US doesn't have the same level of tariffs that the EU has against the US. So again, the main objective, I believe, is to tear down the wall of the EU tariffs against the US so that they can kind of cement and further, go back to a deeper cooperation with the US, between the EU and the US. And the way Trump, at the very least, I think, is trying to achieve that is by tariffs. So in this mindset, tariffs are a tool to bring down EU tariffs. Okay? And the end game of it all is fair trade. And I'm going to say fair trade because I don't believe that we will get back to a state of absolute free trade where you have no tariffs. But I do believe that eventually people will settle down, the EU and the US will strike a deal. However, given the state of the EU, I think that Trump believes that the only way to achieve this is to play hardball. And the way to play hardball is with tariffs. Now, the level of tariffs that get set on April 2nd could give you further insight into what his intentions really are. And I come back to the subset of possibilities. So, possibility number one, again, imagining that 10% is the minimum level of tariffs Trump is willing to apply, 20% is the midpoint, and 30% is the extreme, maximum pressure. I would say the 10%, again, this is just indicative, just as an example, I would say anything that is benign, so 10% being benign outcome, could actually, at some level, put a dent in the idea that tariffs are a tool. Because if you're using tariffs as a tool, what you're really trying to provoke is a reaction. Okay, you're trying to get the other party to do something. If the tariffs that you're putting in place are, again, benign, I could take that as Trump just saying, you know what, I don't really care about, I'm not going to use tariffs as a tool, I'm going to use it as policy. So if we see, Trump just applying a small, or levying a small tariff when it comes to the EU, I could easily see a world where that actually means that it is no longer a tool rather than actual policy, and so they are structural rather than being just a way to achieve something else. So really, in a perverse way, what I'm trying to argue is that the more benign in the short term, it could have you could have a more pernicious and worse outcome in the long term, because if you have a better outcome in the short term with, say, 10% tariffs, okay, as the minimum he is willing to apply, you could take it as, I'm just going to call a spade, and if you have a 10% tariff, I'm just going to slap that on. I'm going to slap on some degree of tariff I'm okay with, and I'm going to start doing what you do, and that's it. And I'm going to actually use that as income. I think that would be, again, not a great outcome, because again, at the end of the day, what do you have? You have a tariff. You have increased outcome that has the potential to act as a headwind to growth. So really, benign outcome in short term, possible tariffs becoming structural. Leading to potentially more pain in the long term. Moving on, case B and C, in my opinion, both would make tariffs look more like a tool. So say the 20% in my example and 30% would actually represent worse outcome in the short term, but I could easily envision a world where the short term is painful, but it leads to the end game, which I was talking about before, which is fair trade. Okay, so worse outcome in the short term, but leads to end game. So fair trade deal between the EU and the US. Now, why would he go for the midpoint and not the extreme level? To leave room for potential retaliation and just not to overplay his hand. I think that would be the a potential reason. Okay, so you have, say, I'll do something that is kind of in the middle, and if the EU retaliates, then I can easily go to 30. I know I'm bigger and more powerful than the EU, so it's just a matter of time before they have to bow. Okay, so that is the way I think about the outcome in on April 2nd. I'm really curious to see what is the outcome, because again, in the last few days, we also saw Trump kind of talk back some of the more harsher views that were put in the news stream by some of the members of his administration. Like, I saw Trump speak about flexibility. Even, a few moments ago, he spoke about how we could give a lot of breaks to a lot of countries. But he followed that up by saying, we're going to give a lot of countries tariffs. So, again, we really don't know what's going to happen. In any case, I think you have to deal with tariffs, and I think you have to deal with some short-term disruption, which, again, act as a headwind to growth. But I think that a worse outcome in the moment, in the short term, potentially could be more welcome, given the fact that it could just be an indication that, again, it is trying to extort a better deal between the US and the EU further down the line. Okay, it's just, I would take the worst outcome in the short term as an indication that Trump is using them as a tool rather than just trying to make tariffs structural. Okay. And so really the worst outcome in the short term for me could just be that further indication that we, like, in a year's time we won't have tariffs. If you do see something like fairly more benign outcome in the short term, I could easily make the case that perhaps they're not a tool, as many people are hoping. Perhaps they're policy, and it is what it is, and maybe Trump just wants tariffs. Again, I decided a while back that although I do have a bearish tilt, currently, given the state of things, I decided, and I think that, this is sensible, that it pays to be an optimist. And so I will take the side that tariffs are indeed just a tool rather than policy, and that tariffs are something that we have to deal with in the short term. But say in 12, 18 months, I believe that we won't be speaking about tariffs anymore, and we'll be well ahead, and we'll be actually be talking about further tax cuts. So again, to wrap things up, my assumption going into tariffs is that the main target for this round is the EU, perhaps so that you can kind of coerce the EU into cutting a deal, making things more fair between the EU and the US, so that then they can deal with other problematic agendas such as China, and so they can go together against China. And a confirmation of that would be probably the worst outcome in the moment. Again, just trying to put pressure on the EU to cut a deal. If you get the more benign outcome in the short term, you still have the possibility of just, Trump playing hardball, but you also have to consider the possibility that he's just using tariffs as, structural policy. He wants tariffs, and that in a year's time we could still be talking about tariffs. I think that is something you have to consider. But overall, I wouldn't. I take the. Again, my expectation is that in a year's time we'll be talking about further rate tax cuts. Okay. So hopefully I made myself clear in this video. We'll see how things evolve on April 2nd. And as far as the S&P 500 is concerned, going back to what I was saying in the first part of the video, the economic, actually, I don't remember if I actually mentioned it or not. Anyway, the economic data so far really we already had the ingredients for a rally. Okay, I was definitely early, 10 days ago, something like that, calling for a potential rally. But really, when you think about it, yes, we had to kind of price in the potential for tariff disruption, and of course, potential for somewhat slower fiscal, stimulus. However, when you look at the raw data, the economic data, right, you have to face the music that we had a benign non-farm payrolls, we had a benign inflation report, and today we had a benign PMI report. Really, again, when you read it, again, it wasn't great. I mean, it didn't really dismiss what we read in February's PMI report, but at least on the headlines, you had numbers coming in better than expected. You had some activity pickup. So again, when it comes down to the economic data, we already had the ingredients for a rally. Now it'll be interesting to see, first off, how far it can go. Again, my expectation is to see something like a 7% rally back up to the excuse me, to the bull market support band, something like the 5,900 area. But once we get there, if we still have all of these, shenanigans going on with tariffs and fiscal tightening, we still really have to feel the effects of it, unless we get, again, barring fiscal, stimulus, or the Fed cutting to zero or something crazy like that. And again, if we have to go back to thinking about the negatives, potentially you could see this move up to the bull market support band, meet resistance at the bull market support band, and potentially have another leg lower. But again, we'll see about that. We're getting definitely too ahead of ourselves. Again, my thinking going into this is that I necessarily wouldn't get married to this move up, unless again we see tariffs dissipating and fiscal tightening dissipating. Again, that's really my those are really my conditions to think about a bit more an optimistic way. So again, if you see pressure getting put on the EU in particular, take that as confirmation possibly that Trump is trying to get a deal for fair trade with the EU. If you see a more benign outcome in the short term, be careful. That is my my warning, because it could potentially just indicate that we're trying to make this structural, and we're trying to do it in a way that won't rustle too many feathers at once, and that we'll have to actually consider tariffs for the long run. So I would much rather see something like the middle ground to even a bit more harsher, just because it would just create chaos and potentially, again, be an indication, as I said many times in this video, of the fact that he is treating Trump is treating tariffs as a tool, not as structural policy. Okay, I'll leave it at that. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.